All right, well, let's get started. Okay, good afternoon, ladies and gentlemen. Today it is Thursday, June 30th, 2022 at noon. Interesting day today. We have, it looks like we're seeing a little bit of a sell-off. Now, a lot of those losses, it looks like the market is trying to recover them. Let's take a look at S&P 500. This is long-term view. We were down a lot more. Looks like we recovered about a little bit over 1%. So, you know, I think the markets are going to chop around here until after July 4th. You know, a lot of your big traders are probably taking the rest of the week off, before July 4th, and then they'll probably be back. We'll see where the market is on Tuesday when we get back, and let's see which way the market decides to go. Okay, so I think the market will either decide on either either breaking up to the upside or to the downside, and we'll see which way she decides to go. Okay, let's take a look at some of our bond and currency data. Let's see here. TradingView has been acting up today. I don't know why. They won't even complete the rest of the chart sometimes. But okay, anyway, this is the 10 and 2. The 10 and 2 is going toward flattening and inversion. Okay. All right. TIP TLT, it is breaking down. All right. Remember how we said we want to see it close below this level? Close below this level here, or close above this level to see which way inflation is going to go. I mean, today, not only is TIP TLT gapping down, but in most of the commodity space, we're also seeing selling pressure. Oil down more than 2% today. Gasoline also down today. That's actually breaking down. That looks nasty. That looks like it's about to head lower. Still the same plan. I mean, I wish oil would come up here so that I could short it, but I don't know if we're gonna get there. Maybe. Okay, maybe. Oops. Grains down today. Oh, I forgot we had that nasty contract rollover. But here, corn down. All right. Same thing with wheat. Oh, wheat's actually a little bit up. Oh, it was down earlier though. Okay, so it's recovering. Oh, we'll see where that goes. Soy. Oh, rebounding. Okay, so we'll see. But mostly, it's, I think, we've been seeing the top happening in commodities, especially in the food and energy commodities. So it's only natural that TIP TLT ratio would fall down with that expectation. We'll see. We'll see if that has staying power. Okay. Natural gas also down. Wow, down over 10% today. Okay. TNX rates are falling as well. That looks like it's going to be the peak, 3.5. This is tailwind for growth stocks. Okay, growth stocks do well in a low interest rate environment. All right, and just for a review, it's because as interest rates go up, all right, future growth gets priced less today as interest rates go up. All right, all that future growth is not as valuable. All right, so that's why as interest rates come down, people then get that risk appetite for growth. All right. One ratio that you can look at is the IVW IVE ratio. IVW is S&P 500 growth. IVE is S&P 500 value. When this is trending up, that means tech, NASDAQ, those indices will outperform value or the Dow. Okay? Basically, this tells you, NASDAQ or Dow. Which way are you going to go? Who's going to outperform? Obviously, as interest rates were going up and inflation was going up, it was the Dow that was expected to be better performance. And it has way less losses than the NASDAQ does. But if this turns up, if this becomes the new trend, higher high, higher low, if this keeps going up, then we can see it flip. Okay. Then, so I think, if we are going to see those lows happen in the indices and we're going to buy the dip on those lows, if this is still trending up, then obviously we would want to be buying the dip in growth names. All right. So it just kind of tells us, which indices, which index are we going to participate in to increase our odds. All right. And this is partially the reason why when I built those hedges back in March, April, the reason why I chose to do it on the triple Q. It's because this was in a downtrend, and I knew that if anyone's going to underperform, it's going to be growth because it's in a downtrend. Downtrend, growth underperforms. Uptrend, growth outperforms. Okay? IVW to IVE ratio. All right? So that is one ratio to look at. I always keep an eye on this, especially when I'm ready to buy the dip or when I'm ready to build hedges. I take a look at this and see where are my odds stacked. Okay. Let's see if this closes. I mean, this ratio, you want this to close here. If you want to see that peak inflation signal. Today also, before the markets open, the bond market opens a little bit earlier than the stock market does. In the morning, early in the morning, before the PCE report came out, it had not dropped like this. The PCE came out and it was the inflation reading that's favored by the Fed, and it was lower than expected. It was like 0.1% lower than expected. I think the consensus that people were looking for was 4.8. It got 4.7, I think, something like that. Correct me if I'm wrong, but yeah. So it was lower than expected slightly, and so that's when we saw this drop. All right. The CPI number comes out next week, or no, not next week, but the week after. So we will see if that sentiment continues. All right. Maybe it, maybe it pops back up. I doubt it, though. I think this is, for now, at least, I'm not betting money on it, but I think this is the seasonal high for now. It could come back. It could come back later on, like maybe next year or so. But maybe for this season, I think perhaps that's the top. Okay? So that's the bonds and interest rate information. Let's take a look at the dollar. The dollar was up today. It looked like it was on a rampage today, continuing its rally, but today it's falling. In later trade after it opened, it started falling again. So we'll see where it ends up. We'll see where it ends for the week. I think weekly levels are more important for the dollar. I mean, for the week, it's still up. Okay, this is just one day. I mean, tomorrow it could come back and end at the highs of the week. It could. All right, and if that's the case, it looks like then it would continue upward. On the monthly, I mean, that looks like on the monthly it's breaking out. And today's the last day of the month. So What is the high of last month? The high of last month was right around here. It's not that far away. Only about 0.3% away from where it is now. So it could definitely, by the end of the day, we could be closing higher than last month's high. It's very possible. All right. I'll believe it when I see it at the end of the day. So this does end the monthly candle. Okay. We'll see where it goes. Actually, why don't we take a monthly candle view of this as well, TIP TLT. So yeah, that looks like it's topping out. Does it not? You know? It could continue down next month. I can see that fueling a rally in the equity space. But again, we shall see. It could July could retest maybe with the Fed meeting. Maybe it could retest and then come down again. It could. So maybe we see just one more leg of volatility. I just think, just in my gut, all right, this is not backed by data or anything, but my gut tells me that there's one more drawdown left. Okay, I still think there's going to be one more. I do believe that it's very likely that we'll see these value areas again. Okay. It would be nice. It'd be nice to see around here. I'd be able to get in some shares and some calls here. We'll see. So this is what the month looks like for SPY. TNX. Let's just look at the month chart. TNX. It broke out 2 months ago. Tried to retest the breakout. Didn't even make it to that line. And then we went up. But now it came down from its highs. We'll see if it can go back up or if it continues downward. All right. It might come down to here and then come back up later on in the year, maybe next year. We'll see. All right. Let's just take a look at some of our other positions. Australian dollar, what a recovery today. Australian dollar, all right? I'm looking at that right now because I'm in the metals and in China. I have gold long and short China, long FXI puts, and I'm long a vertical call spread on gold, all right? Gold is kind of acting like a currency right now. As the dollar retreats, gold will come up. When dollar goes up, the gold will retreat. It doesn't always have that one-to-one or negative correlation like that. But right now, it seems as if that is what it wants to do. At least for the past few sessions, that has been the case. All right. So either way, if this breaks up, I can see gold doing a little bit better. Australian dollar is also a indicator for the metals. So if this goes up, I do expect our gold to do a little bit better. If this breaks down, then most likely our puts on FXI will do better. All right. So we'll see which way it goes. I suspect that it's probably gonna stay around here again until July 4th. All right. I think a lot of the moves are gonna happen starting in the second week of July. All right. That's probably where we're gonna see some action. All right. Which way will it go? Hey, flip a coin. All right. And just manage risk. I don't know which way this is gonna go. Okay. It's kind of in no man's land. It's just bouncing up and down. It looks like this is support. We shall see. All right. We'll see. We'll see what happens. This is what it looks like for the month. If it closes here, maybe next month it keeps going down. If it does, if it breaks this and it just keeps going down, oof, watch out. Watch out. All right. FXI will then probably continue downward too. All right. For the day, it looks like it's recovering some losses. Yeah, it was down. It was down way more today, but It's recovering some of its losses. We'll see which way it goes down. Charting FXI on the daily is not a good idea, just because most of the Chinese stocks, they'll trade while we're in our after hours and pre-market here in the United States. That's why generally for FXI, I like to look at the weeklies or the monthlies, because at least it doesn't show you all those big gaps daily. Because the pre-market, basically these candles, these daily candles, is their after hours market. So we're basically, when we look at the candles on the daily on the FXI, we're looking at their after hours market or pre-market. So that's why, to even out that noise, I like to look at the weeklies or the monthlies. We'll see if this ends down for the week. For the month, this is what it looks like. Today's the last day of the month, so that's why today we're going to focus a lot on the weekly and monthly charts. But yeah, we'll see which way this goes. Gold. Will it come back up, or will it just keep breaking down? Today I missed, just because of by a few ticks, I missed my order when gold was at 18.06. I said that I would be legging into more of my gold call spreads. It did go there. Not once but twice. Once in the pre-market and once about like an hour or so ago. But it missed my limit order on my spread, and now we're about 6 points ahead of that. I'll be patient. I mean, if it comes down a little bit more, or maybe I put that order in again. We'll see. I mean, the order is still ongoing right now. I missed it by like just a couple ticks, but we'll see. Same plan as before. If we get to that 108.06, I leg in some more. However, if it closes below, this point right here, 1785 or so, if it closes below there, I'm out. I'm out of gold if it closes below this. So that it won't be too bad of a drawdown. Probably I'll eat like 15 or 20% of the calls spreads that I've bought. I'm about like 8-9% down. They're December's, and it's a very, very small position. Again, I'm still 95% cash right now. All right. Most of that 5% that's being deployed is in FXI and EEM puts. This is my third largest position of that in that 5%. So we'll see. All right, it's very small positions. I'm still legging in. I'll leg in some more if it ends a little bit lower in the day. But again, if it closes below that 1785 or so, I'm out. I'm just gonna get out. Okay. I notice how I said it has to close there. Okay. Not just because it touches there. I'm not gonna get out just because it touches there and rebounds from there. But if it ends up closing there, then yeah. Then I'll just take my loss and move on. All right. EEM recovering its losses. A lot of China in EEM ETF. For the week, it's down still. It could fall further tomorrow. The week's not over. The month is over later today. Okay? The month is over later today. We'll see where it ends today. Where it ends today, it ends the month. All right? So that's that. A lot of people asking me about Bitcoin. That's the monthly candle. That just looks nasty. We'll see. Yesterday, actually, what happened was during it was really early this morning, late last night, right at around 20,000. Remember how I've been telling you guys about the options positioning? I said that if we approach those big put walls and at the same time implied volatility goes up and we see put orders coming in, that we could see like a mini panic. And that's exactly what we saw. I got an alert and I woke up then and I was kind of sleepy. I should have recorded it. I should have recorded the Deribit, the order flow. But right here, exactly that's what happened. Implied volatility went up. All right. When we go to Deribit, I'll show you in a second. But remember that DVOL that's up there in the top left corner when you look at the options. But I'll show you when I get there later on. But here it shows the implied volatility as well. You can also use this too. But anyway, we saw right here as it approached, it was fine. Everything was fine. And all of a sudden, boom, IV just went up. Put orders were coming through. Lots of little orders and some big orders came through for long puts. And, I said that, at those big options walls, especially on puts for risk assets, that what you want to see is that it approach, and then you want to see implied volatility. Well, if you're long, that is. If you're a bull, you want to see that implied volatility come down, and you want to see put sell orders coming through, and then you see a short squeeze. But at that level, if you see volatility rise and you see put orders coming through, that means all those institutions, all those market makers who were short puts, they don't want to be on the hook on short puts in the money. Or maybe they don't want to have all that gamma exposure. And again, as we get closer and closer to expiration, that gamma effect becomes stronger. All right, the closer we are to expiration, the worse the gamma effect can be for people who are short options. So all those long puts that the market maker had to facilitate the trade on, meaning the market maker is short on those puts. And we saw a lot of those puts expiring for this week. If they're trying to hedge that negative gamma, they may have to buy some more puts to hedge for that. All right. And I think that's what we saw. And that's why we saw the implied volatility go up as people were buying more options to hedge all that delta and gamma risk. And when that happens, the market maker has to buy has to sell some of that underlying to facilitate all those net puts being bought. All right. And that's what causes these little mini panics. That's why at those put walls, especially for SPY or now for Bitcoin, if you get to those put walls, you see implied volatility go up, put orders coming through, boom, mini panic. All right. See a quick drawdown. Opposite is true. If we get to a put wall, implied volatility drops, and those puts are getting sold, boom, we would have seen a little short squeeze. Okay? So that is what we're seeing right now. Let's take a look at Deribit. Let's take a look. Bookmarks. I have this all bookmarked. All right. So here, see that number? It went up. Yesterday it was at 91s. Actually, it was I believe it was in the high 80s right before it popped up into the 90s. But let's just take a look at some of the positioning here. So the dailies. All right. So on the dailies, we did have. Wow, look at that. We did have significant volume last 24 hours. Look at that. 20,000. 19,000, 18,000, very short-term hedging happening. on same day expiration, tomorrow's expiration, same thing. We also saw a good bit of hedging happening here. Not as much. It looks like a lot of it happened on the 1 day, whatever's expiring today. It looks like we saw a good amount. Okay, so saw a good amount of hedging there, which is also what happens in SPY. Lots of 0 day hedging happens. 1 day hedging. It's a very cheap way for institutions to hedge just daily risk. 7 day. So this is what happens next week. Seeing some good volume again. Our big OI is for next week is at 20,000, but we're seeing hedging demand happening for 18,000 and also for 16,000 now for next week. All right. Let's see where it is for the week after. Decent volume, not as much. Decent volume. I'm expecting there to be more on the monthlies. Yep. Right there. Looks like 17,000. All right, 17,000. And we still look at all these OIs. Look at all this open interest right here. Lots of open interest. Lots of people holding on to these put positions between 21,000 and 15,000 for the end of the month. Okay, and that's also when we have the Fed meeting. The Fed meeting is like a couple days before this expiration. All right, all eyes on the Fed, even amongst crypto traders. Next month, not as much. Let's look at the quarterlies. Not as much volume. Let's look at December's. It's a volume definitely dropping off. So okay, so it looks like a lot of hedging and a lot of options activity happening for July, the July expirations, as we've expected. This is something that we've noticed for a few days now. Okay, let's take a look at some of that options data. I just want to take a look at some of the skew. The skew looks very similar to before. Again, huge reverse skew, and it's not until we get to September we start seeing forward skew, some perhaps some call speculators for September and beyond. But before then, it's all about protection, all under the at the money strikes. All right. Look at that. Puts, bought. Look at that. It's all puts, baby. So look at this. So okay. So remember how I said that that when we get to, as we approach, volatility increases, puts get bought, right? And that's what sends it into a mini panic. That's what happened. Okay, right here. All right. All these puts got bought. You can see also, I'm being sold. So all this is the what? Is that the sell? No, that's the buy. Yeah, right here. This is the amount that they bought. There were some more puts that were being sold, but those sold puts are a little bit further out. So it looks like a lot of those puts that were bought. See, look at this. Buy. These are big non-block trades. Well, let's look at the block trades. So, we start seeing some large put blocks getting bought. All right. But again, I think this was mostly shorter dated. It was a lot of it was in the shorter dated puts, if I remember correctly. And so again, that was because of market makers and institutions having to hedge their gamma exposure because they're getting closer to expiration. They don't want that gamma working against them in case Bitcoin drops further. And so they had to buy those puts or buy other puts in order to hedge for that gamma risk. At the same time, they sold some further dated puts. I think there's some put selling happening already. Put selling is almost like limit buying at a lower price. All right. So we're seeing some put selling happening further dated, and we saw some closer dated put buying, and I think that's what caused that little bit of a markdown, that quick markdown earlier this morning. All right. So that dynamic hedging is still in play. All right. Hopefully, I know a lot of people were short. On some of the other discords I'm at, a lot of people were short, so some of them were celebrating. So good for you guys. Okay. I still think, in my opinion, my view is that the risk to reward is still not that great. I would rather see, I would rather try to short if it goes to 24,000. If it goes to 24,000 and I see that it's getting rejected, that's when I'll want to go short, put a tight stop. If I were inclined to go long, I would probably be waiting for under those put hedges. So we saw put hedging all the way from 15,000 on up. I'd be waiting at 14,000. If the market were to go down to 14,000, that's when I'd start legging into some longs. Unleveraged, of course. I wouldn't do a leveraged trade on Bitcoin, but that's just me. Okay. Oh wow, look at this. S&P 500 almost recovered all of its all of its losses. We're almost in the green today. Look at that. Interesting. All right. Australian dollar also coming up. Dollar coming down. S&P recovering its losses. Interesting. Again, I just think we're just going to chop around here for a bit until after July 4th. And even after July 4th, before CPI and all that comes out, I think there's going to be a lot of uncertainty both directions. People are going to get long, and they're going to either short or hedge afterwards. Hedgers will probably take hedges off at certain low points, and I think it's just going to chop around here for a bit. We'll see. All right. Again, the plan really hasn't changed for indices. It's whichever happens first, that's what we're going to go with. We just don't know which one's going to happen first, right? So, again, the plan is either we get to 395 and above, and I start scaling into vertical put spreads, or we start getting into 342. I start legging into some SPY shares. We get under 340. I get into a year-long in-the-money calls. All right? Nothing has changed in that plan. Okay? Nothing has changed. Oil, same thing with my oil plan. Coming back up. Maybe we get back up for the day. Who knows? All right, so yeah, for this, right around 119, 120, that's when I'm going to be building put vertical debits targeting around the 100 zone. Okay, that will be a nice payout. Also, same thing with corn. I want to see, wow, that's breaking down. I mean, it would have been nice to see 720, 725 as short. I don't think it's going to happen. Maybe it just keeps just straight going down. Oh, well. But we call it, we call the top in corn here. Shoulda, woulda, coulda. Shoulda just went with it and chased it. It is what it is. Sometimes you get them, sometimes you don't. All right. But definitely it looks like that's going down. Remember weeks ago when people were talking about world famine and prices skyrocketing? Yeah, that's all opinions, okay? In the end, opinions are often wrong, but the market is never wrong, all right? In the end, if there's an argument over which direction the market's going to go, the market will be the arbiter of that argument, okay? So that's what I see so far. Let's take a look at rates. Are rates still dropping? Yes, they are. Rates are dropping. What does that mean? TLT is rising. All right. Bonds are rising. Interesting. All right. Would I short bonds? I might. Maybe around here. 132.72. If TLT gets back there, maybe I buy some put vertical spreads for the way down right here. I wouldn't short it anywhere else though, because this it can go up. I mean, a lot of people are short bonds right now, so there might be a short squeeze happening. We shall see. All right, but I'd be willing. I think the risk to reward is favorable for a short here. Okay, so I'll be looking out for that. All right, UVXY still positive for the day, but it is coming down. We shall see. So that's positions. As far as, today, nothing changed. I haven't really changed any of my positions. Most likely, I will not be adding or doing anything until after July 4th. And then we'll see which way the market wants to go. Around July 4th, I just want to warn people that over the weekend, okay, which is very characteristic of China, over the July 4th weekend, China will be releasing lots of data around their different industries, their manufacturing. A lot of economic data is going to come out for China during that weekend. We'll see what happens. Maybe it pops up, maybe it doesn't. Okay, so we'll be on the lookout for that. If it pops up and we're noticing that Australian dollar is also confirming that move, we'll definitely exit FXI for a loss. It is what it is. If it breaks down, well, we'll hold on and we'll start. We'll take profit elsewhere. If China does fall, I do expect that it's going to probably revisit the lows if it breaks down. All right. If it breaks down, we'll probably revisit the lows, maybe even further. But I'll start taking profits when it gets here. Okay. And if it breaks out at the same time next week, the Australian dollar also confirms and starts going up here and closing above these levels, yes, then I'll exit China. Okay. If the dollar breaks down, if the dollar starts breaking down heavily, and we start losing. If we close the week, let's say, under these levels, I may decide to exit EEM puts as well. Okay, these are in the profit right now. Our EEM puts are in the profit. With all the scaling in that I did, it's in the profit right now. Not much, but it's in the profit, slight profit. So we shall see. Okay, we'll see. We'll see what happens. Again, everything's small. All my positions combined, gold, UVXY, EEM, FXI, uranium, all that is all combined 5%. Out of that 5%, most of it is the EEM short and the FXI short. Then it's gold, then it's UVXY, and then I almost nothing in uranium. Oh, and also Dow. Also, this is almost nothing. I didn't buy much of this. I bought just one dividend's worth of the shares I wanted to buy. I almost forgot about this. We'll see. This, again, is almost nothing position. Even when I started out, I didn't buy that much. I didn't get much of a fill. But we'll see. We'll see. If China goes up, but Australian dollar does not go up, I'll actually start legging in more of these puts. I'll only get out of this if Australian dollar confirms it. All right. Yeah, industrial metals still coming down. Oh, where's that ratio that we have? We have that gold copper ratio. The gold copper ratio It's actually going higher. Okay? It's actually going higher. And usually when it goes higher, usually gold follows. All right? It's still going higher. Even though gold and copper are both falling, copper's falling faster. Industrial metals are falling faster. Okay? But generally, again, after this goes up, after a couple of weeks, gold will also start coming out. Generally, okay? But we'll see. We'll see what happens. We'll see what happens, okay? Nothing's 100%. All right? Well, let's see what it is for the month. Oh, yeah. I mean, that looks like a breakout, doesn't it? It ends like that. Breakout. And then about a month or two later, we see some continuation in gold. Again, we shall see. We shall see. Okay. Anything else you guys want to see? Anything else you guys want to take a look at? Long-term trends. Again, I think right now, just from the risk to reward or reward to risk standpoint, it's best to just sit on your hands right now. Okay, I know that a lot of you are tempted to click those buttons and buy and sell and do all this active trading. I get it. We wanna feel busy because we don't feel productive. We've been taught ever since we were kids that hey, you have to work hard to be productive. Well, in trading it doesn't really work like that. Okay, sometimes less is more. Okay, right now, with all this uncertainty and with very choppy price action, I think it's best to just sit out and wait. All right, wait for those high value levels to short or high value levels to long. All right, and especially with these big central bank meetings coming up, taking on large leverage positions before that is like the easiest way of blowing up your account. All right, no matter how accurate you may think you are, that even if you're 90% accurate, that 10% of the time when you're wrong, you could seriously do some damage to your portfolio by miscalculating that risk. And again, as traders, what are we paid to do? We're paid to manage risk and protect capital. Okay? That is our most important job. All right? So always remember that. Again, I think the reward to risk, I think, favors us to just sit on the sidelines until after July 4th. Maybe then we get some clarity, and then we can start trading with some conviction, okay? That's why I've kept all my positions very small, and I've been very selective in which tickers I trade, okay? I'm not in any U.S. indices just because, again, we have all these big central bank meetings, we have all this uncertainty, and we're not getting our value levels. All right. Whereas with EEM and with FXI, it was very different. We were facing a rally. We started buying around, I would say around here or so. All right, at the highs. All right. And we saw Australian dollar still breaking down. So that. It's a low risk entry. I mean, I would say, with China, with all the news dumps that they have, and sometimes with the liquidity injecting, I mean, this could ferociously go up. It could, and so that's why I kept it very small. EEM, it was our outlook on the dollar long term. All right, we started around here or so, legging in. All right, so we'll see where he goes. IWM trying to recover some losses. Oh, it's in the positive now. Well, look at that. It was really down negative today. It was more than 3% down. It was the weakest one today. Actually, hey, by the way, speaking of HYG, yesterday I posted something about HYG. Let me see if I can find it. Let me see if I can find it. I posted on Twitter and on the Discord. Let me see. Where is it? There was a huge options order. Yeah. Okay, here you go. There was a huge options order. So some trader, and this all happened at the same time. Somebody put vertical debit spreads, betting that it was going to go down by August. All right. And financed that purchase by selling put vertical credit spreads longer dated, which is mildly bullish. So they took a longer dated, mildly bullish credit spread to pay for a shorter dated bearish position. All right. Very interesting. And actually the payout is like almost like 10-1 on this if it drops. So I think it's a hedge. I think there's somebody hedging their junk bond portfolio, and this is how they're doing it. But that was a huge order that came through. Huge order. All right. So somebody is actively hedging. I believe it's a hedge. I don't think it's a speculative play. I mean, it could be, but with that size, it's probably somebody who's hedging. All right. Somebody's hedging. So will this drop? Will it not? Hard to say. One thing I do know is that we've been looking at this. I don't think this was updated yesterday when I showed you guys this for yesterday's video. But yesterday, again, more declines than advances. We want more advances than declines 3 or 4 days in a row. That is when we know, okay, liquidity's coming back into the market. When the junk area of the market is getting bids, then we know liquidity's coming back. But until then, it's just noise. I want to see this number higher than this number at least 3 or 4 days in a row. We got one day, I think it was like Monday. Was it Monday or was it Friday? Yeah, Friday. We had one day where it was up. Oh no, 2 days the day before, but mildly. Yeah. So only 2 days. So it was Thursday, Friday, and then on Monday, it went back negative. Okay. So that was only 2 days. Again, we want 3 or 4. 4 is better. 4 would, give out less false positives. But we're not there yet. Huge decline. So we'll see what happens at the end of the day today. We'll see what the advanced decline is on this. Okay. But again, I want to see the advances higher than the declines 3 or 4 sessions in a row. And that's when I know liquidity is coming back into the market. All right. When liquidity comes back into the market, boom. It may not be even, hey, you know what? It may not even be a bad idea to buy IWM calls if that happens. IWM is the most sensitive to liquidity. So if we start seeing liquidity roaring back into the junk market, I may buy some in-the-money calls on IWM 6 to 12 months out. And then take profit. Take profits, scale out as we get to here. The 180s or so. Start scaling out. If I get double, I'd take half and let the rest ride. I might add that to our plan. That actually sounds like a good trade. So, okay. So that's what I see so far. All right. Anything else you guys want to see? Any charts? Any positions you want to talk about? Going once, going twice. All right, then. In that case, I am going to end this stream on YouTube. I'll keep our Twitch account streaming so that you can see the charts and data that I'm looking at throughout the day. I'll still hang around here. I will be out just for about an hour or so. in the next 30 minutes just for an appointment, but then I'll be back. So I'll still be hanging out on Discord. Maybe at the end of the day, we'll do another live stream just so we can review end of month data where everything closes. I think it's very worthwhile. At the end of the month, that's what I always do. I always try to look at what the end of month closing prices are. So maybe 30 minutes before the markets close, I start streaming again. And we will try to stream for an hour so that we can take a look at the junk bond data. Because I think that junk bond data, those advanced declines are really going to be telling, especially with HYG recovering all of its losses. Let's see what happens here. Let's see what happens. Okay. That's very interesting. Wow. That's a huge recovery. That's a big move for junk bonds. That's a big move for HYG. We'll see. Lots of options activity on HYG. Not today, but yesterday. Huge orders. Huge orders coming in on not IWM, HYG. A little more subdued today. Oh wow, puts to call. Look at that. Usually when your puts to call is over 2 on a risk asset, that usually marks a bottom. Okay. Whenever you see like put to call ratio above like 2.5 or 3 on like the S&P 500, that usually will mark a bottom. No, we're nowhere near that. We're nowhere near that in S&P 500. But HYG, 3.5. That's crazy. Lots of puts being traded. I'll take a look and see where all of this came from. I'll have to look through all the orders, but yeah, I'll see where this came from. That's interesting. Actually, is there a way we could just take a look at it now? July 15th, August. So again, it's a continuation of yesterday. Lots of Augusts, and then now we're seeing some short-term hedging. So probably CPI data hedging, maybe. 40,000, 40, 63, 68, 63. 68, 63. I'll have to see if those are buys or sells or what kind of spread that was. But then at the same time, they did August. Or somebody did August as well. 72, 71. Interesting. Okay, I'll take a look and see. But yeah, we're starting to see lots of puts trading on HYG, either for hedging or speculation. I think it's mostly for hedging, but we shall see. All right. Okay, guys. Yes. This will end high noon highlights. Again, 30 minutes before markets close, I'm going to come back. We're going to do a live stream, end of month, review everything, look at final closing prices. Hopefully, the FINRA website will update, and we'll be able to also see those advances and declines. Okay, so I think that's going to be very telling for what happens later on. Okay. Again, any questions, any comments, any rude remarks? All right. I'll be signing off YouTube. Again, Twitch will be on. I'll keep the charts and data streaming, and I'll hang around here for another 30 minutes or so. Okay? All right.